Welcome to the August 22nd, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with this week's fast-paced tour of the global financial markets. I'm also president, McGowan Group Asset Management. You can find us at NetWorthRadio.com. Be sure to subscribe so you'll get the updates when there's fast-breaking news in the financial markets. We've heard all year long about the coming recession, so I want to give you the updated economic forecasts from the most advanced economists in the country, and it's posted in Bloomberg. This chart is actually posted for you at networthradio.com, and this week's broadcast is available Apple Podcast, Net Worth Radio. Okay, real GDP. We were running at about 5 to 5.5% at the end of 2021. So this is economic growth and real economic growth after you subtract inflation. Why is this important? Well, it answers the question, are the economists actually expecting a recession, or are we already in one? Let's look at what happened. Real GDP was actually 7% in the fourth quarter of 21. That's pretty strong. Then, the official definition of recession, after subtracting inflation, we were minus 1.6, minus 0.9%, and that corresponded to the Fed tightening because the inflation was hotter than the economic growth. Well, real economic growth in dollar terms was positive. You just subtracted a big inflation rate. That inflation rate expected to come down to the point that real GDP is 1.5. And that corresponds to inflation being 0 for the month of July. I realize it was just 1 month and trailing was 8.5%. Well, 1.3% fourth quarter of 22. Those are positive numbers. That's a stealth recession where inflation temporarily runs more than economic growth. 1.1, 1.1, 1.4, 1.5 by the end of 2023. This is very similar to the Obama administration, where we got anemic economic growth at about 1%, and you did hit record employment, which we just did. Well, that says if you're worried about a recession, it ain't here yet, except for the official definition already being met. And the markets, with a full-fledged bear market, built in a mild recession. We don't have dollar contraction in the economy yet. And correspondingly, this is the S&P 500 year to date. We hit that low. S&P was down 26%, and we've had a 17% rebound since the June 15th lows. Now, we came to you and asked if that was a bottom shortly after the market rebounded a bit, and we got some positive data on corporate earnings, which, one, revenue grew more than inflation, and corporate profits grew about like the 9% inflation at the time. So, nice bounce there. Does it continue? That's important. Here, we've got S&P 500 earnings. Now, you take an S&P unit, how much did those 500 companies make after tax per unit of the S&P 500? It hit $40 in 2018. You had a profit recession, got barely above it in 2019. Then you have the pandemic, and then you have record corporate profits. It was $40 here, $50 right here for an extended period into 22. And look at this, corporate earnings right now at about $55 per unit. This forecast has come way down, by the way. And what this says, by 2024, in the third quarter, 2024, so a couple of years from now, you're looking at about a 10% to 15% growth in corporate profits instead of this amazing, robust growth that we got right here. So that's slowing growth. And there will be some companies and some pockets of disappointment. Retail has already shown that they're in a recession and having to give discounts at this point. So it looks like some industries, like energy, which I'll show you in a little bit, energy in a big boom time for profits and revenue, and retail in a type of recession. It's going to be a mixed bag as we go through those, and we'll bring you more updates as we go. I wanted to get the top 10, bottom 10 over the last 90 days. So out of the 500 companies in the S&P, which ones did the best over 90 days? Now 90 days includes May to June 15th, we melted down and then we rebounded, okay? Now, who did the best? Enphase Energy. That's actually a solar provider. Well, Paycom Software, Etsy rebounded, Chipotle Mexican Grill, Holy Burrito, 33% gain over the past 90 days. Costco's done great, 32%. Walmart and Costco experiencing a phenomenon. Wealthy people, affluent people, actually shopping more at Walmart and Costco. Makes sense. Your gasoline, food, and utility bills just went up by about $1,000 a month. Well, you probably don't eat out as often, and sometimes you go to Costco to get a better deal. All right, here, and they have cheap gas. Newmont Corporation, gold got smashed. 1760 per troy ounce at the end of this week. You know what gold was 11 years ago? It was 1900. That's zero cash flow and a negative return over 11 years. Now, I'm not making a prediction for the future, but I'm also saying gold does not always work. And you've got high inflation right now. Why isn't gold just raging? Okay, Royal Caribbean and Carnival got smacked by 25%. Oilfield service, too volatile for us to trade, and this is good evidence. Halliburton and Baker Hughes actually rounding out the bottom 10. Western Digital, some of the chip companies are getting smacked down because they're expected to make less money last year. Not sure how that's actually coming about. The housing boom, according to this chart, is over, and other headlines which we covered on the Apple Podcast Net Worth Radio. Look at this. I come out to here, this part right here. That is a 26% decline in existing home sales, and the last time it was this low was actually the pandemic. Now, you go back in time, we're already at the lower end of this range. What does it mean? Activity in the housing market just dried up, and you can see other pockets of this. These are housing starts, and they came down substantially too. This is still elevated, a more normal level, but home builder confidence actually dropped into contraction territory just recently. So the residential boom that was causing a lot of the inflation, construction costs too, that has temporarily paused. And we'll have more data on that next week, what's actually happening in the residential housing market right now. All right, natural gas. Obviously, the energy stocks, top performers last year, top performers this year, tends to be about a 6-year cycle. Obviously, price volatility in there, but this is looking at natural gas futures. What's happened here? Look at natural gas. This is a 10-year chart. You are with distance the most expensive natural gas in 10 years. And there are reports that Europe is paying as much as 10 times what we do in the United States. That's why the United States is now the #1 exporter of liquid natural gas. And that also gives you a clue about energy infrastructure. $9.75 per million BTUs. Look down here. The low points are below $2. And yes, that unfortunately means the utility bills will keep going up. But it also means that that natural gas infrastructure is worth potentially a lot more money. I'm Spencer McGowan, President, McGowan Group, networthradio.com for these charts and graphs and the more detailed program, including investor lessons from Texas financial history. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.